So welcome guys. I just wanted to do a small review on Friday's price action, and I just wanted to teach how to trade or how to scalp specifically using ICT, first presentation, fair value gaps. So if you see, this is the Friday's daily chart, and this is the 1 minute chart, and this is the 15-second chart. So on Friday, price came back into this daily fair value gap. So I plotted all the four quadrants on this daily chart. So I'm going to review this afternoon price action, PM session price action. So if you see this retracement after lunch, post 1 o'clock, you can see price retraced into this first presentation fair value gap formed on Thursday. This is 1:40 p.m. That is, this was the first presentation fair value gap formed on Thursday post 1:30 p.m. So let me highlight this. PM session, first presentation fair value. So we have many first presentation fair value gaps given by ICT. One is silver bullet R window, which is between opening range first presentation fair value gap between 9:30 a.m. and 10 a.m. and first presentation fair value gap formed post 1:30 p.m. This is one more, and first presentation fair value gap formed after 7 p.m. So you can see this on Thursday 1904, that is 7 p.m. post 7 p.m. So we have first presentation fair value gap formed between 9:30 a.m. and 10 a.m. That is the first one. First presentation fair value gap again formed post 1:30 p.m. That is the second one. First presentation fair value gap formed post 7 p.m. That is third one. And we have one more midnight first presentation fair value gap formed between 12 a.m. and 12:30 a.m. So just let me highlight all this first presentation fair value gap so that it will be easy. How to copy this? Okay. This is one more. There might be other first presentation fair value gaps, but these first presentation fair value gaps are significant, which ICT has mentioned in his lectures. So opening range, open session, post 9:30 a.m. and first Asian session, right? Asian session, first presentation fair value gap, post post 7 p.m. And one more is midnight. Yeah, midnight. Midnight first presentation during post 12 p.m. 12 a.m. Sorry, 12 a.m. So far, these are the first presentation farewell gaps taught by ICT in his lectures. So first one would be this. So opening session, first presentation farewell gap post 9:30 a.m. And the second one would be PM session, first presentation farewell gap post 1:30 p.m. First presentation farewell gap post 7 p.m. Midnight first presentation farewell gap post 12 a.m. So if you look at this farewell gap, it was formed on Thursday at 1:40 p.m. So just let me scroll back and show you. Uh, where it has formed. Yeah. So you can see this farewell gap. So this was formed on Thursday at 1:40 p.m. So this was the first presentation farewell gap formed after 1:30 p.m. So if you mark a line at 1:30 p.m., then you see which is the significant first presentation farewell gap formed after 1:30 p.m. So this was the first presentation farewell gap formed after 1:30 p.m., which formed at 1:40 p.m. I'll just remove this and we'll go back to our current timeline. So that fair value gap has been extended here. So that is the first presentation fair value gap which has been extended here. Thursday 1:40 p.m. So if you see this Friday's price action after 1 o'clock, we had this reversal, and you can see when price went into this first presentation of Thursday's PM, first presentation fair value gap, we can see the body never went or even went even up to 50% of this fair value gap. We had an immediate rejection. And the same thing, this is the 15-second chart. You can observe the same thing happening on the 15-second chart. You can see this first presentation fair value gap is on 15-second chart. Price never closed above this first presentation fair value gap. So we had this immediate rejection. So now we can see, now we shall see where we could have entered our short positions. So once we have this swing high formed, this 3-candle structure, this candle, closing below this candle. So we have this swing high after rejection from this first presentation fair value gap post PM session. On the next candle itself, you could have gone short. So this could have been our first entry. And if you look for other entries, so this is okay, let me plot this. So this was a bearish fair value gap. So once this candle closed below this bearish fair value gap, so this will become a balanced price range, and you can see price when came back to this, it never went with the body above 50% of this balanced price range. So we immediately rejected from 50% level and we went down. So the first entry would have been on this candle. Once we had this swing high formation confirmation, you could have entered on the top of this candle, or you can take this balanced price range, you wait for this candle closure below this fair value gap. Once this become balanced, then you wait for the next candle. You could have gone short here or you could have gone short here. And you can see this candle went up to this volume balance. So this could have been our second entry. Whereas what else we could have done is we could have taken this bullish fair value gap. So once this candle closed below this bullish fair value gap, again this will act as an inversion fair value gap. So you can see the price never went above this balanced price range or inversion fair value gap. So you could have gone short on any of these three candles. So now we shall look for the same chart. We'll look on the 15-minute chart and we'll look for better entries. So for example, the same thing has been plotted here. So you could have gone on 1-minute chart either on this candle or this candle or this candle. The same thing if you look into this 15-second chart. So again, price went back up here, never crossed this balanced price range. Price stayed, you can see this VIX, even VIX also did not cross this. So once this candle closed below these two candles, these two up close candles, we have a confirmation of bearish order block. So once this candle immediately closed below these two up close candles, we have a bearish order block and we have a breaker also. This down close candle, which act as a mitigation candle now, this down close candle, this series of up close candles is the manipulation and this is the expansion, which closed below this bullish fair value gap. So on the next candle, you could have gone short here. At this entry would be breaker, this mitigation block. You could have gone short here. So the first entry would be on this candle. Once we see this swing high formation, and the next entry would be at the breaker, at this mitigation block. So what you could have targeted is, since we are doing only scalping, you could have targeted this swing low, or you could have targeted even this bullish fair value gap midpoint, that is 50% of this bullish fair value gap. Say suppose we entered at the low of this breaker. Our stop loss would have been at the top of this candle, around 6.25 points stop loss, and our first take profit would be at the midpoint of this bullish fair value gap, which is around 21 points, and the second partial would be at this swing low, which is around 48 points, and our final take profit would be at this entry of this fair value gap. So it would have been from here to here, around 77 handles. So this was entering using the first presentation fair value gap, PM session first presentation fair value gap of Thursday's price action. So now we'll look into this Friday's PM session first presentation fair value gap. So again, once we went down, we have one more fair value gap here. If you just extend this fair value gap, we again closed below this fair value gap. So what we are waiting is, we are waiting for 1:30 p.m. first presentation fair value gap. So this is 1:30 p.m. candle. So after this was the first presentation fair value gap, which is marked here. You can see Friday 1:32 p.m. So this was the first presentation fair value gap. So when price went back up and created this bearish fair value, this balanced price range. So once price closed below this bullish fair value gap, which is PM session first presentation fair value gap, you can see the candles of the body never closed above 50% of this fair value gap, this balanced price range. So that is our signature. We want to see that the wicks were closed above this, but the bodies of the candles never closed beyond 50% of this first presentation fair value gap. So now what we are waiting for here is we want to see a rejection from this range. So once this candle closed below this up close candle, then we have a bearish order block. We have a bearish order block, then we could have entered on this candle and we could have rode this right till this daily fair value gap, or you could have even hold your trade till 50% of this fair value gap. So now the same thing we shall look on 15-second chart. So now it will be a little bit different on 15-second chart because the first presentation was given here itself in this range only. So even on 15-second chart we can see this inversion, this bullish fair value gap has been engulfed by this candle, then the subsequent candles respecting this. So you could have waited for this rejection from this first presentation. You can see this candle just engulfing this bullish candle. So on the next candle itself you could have gone short. So why I am showing this 15-second chart is, on a 15-second chart, if you take your entries on lower time frames, your risk will be reduced. So just for example, say suppose I have taken this entry on the 1-minute chart. So my entry would have been on this candle. Say suppose I entered somewhere here. So my stop loss would be around 12 handles. Say suppose the same trade I took on this 15-second chart. My stop loss would be, I will be entering on this candle once this bearish order block is confirmed, and my stop loss would be on top of this candle. So which is 6 handles, approximately 6 handles. So which is half of the risk on 1-minute chart. So that is why when I'm looking for the trades, I'll be looking on 15-second chart. But the main trade formation and confirmation will be on higher time frame, but I'll try to enter on lower time frame so that my risk will be reduced. So just to recap everything, so far what ICT has given is 4 first presentation fair value gaps. I think there might be many, but these are significant which he has mentioned in his lectures. So I just wanted to review this price action on Friday's afternoon price action based on this first presentation fair value gap, how we are going to trade. So this was the rejection we observed from Thursday's first presentation, PM session, first presentation. We had beautiful rejection from this. We had a swing high confirmation, and we had this inversion fair value gap, and we could have taken our entry here. And we had this one more entry post 1:30 PM. Again, we had this first presentation, Friday's first presentation, post 1:30 PM. So this would have been our another entry. And I just wanted to show the sensitivity of first presentation fair value gaps. You see this rejection from this, you see this rejection. So this rejection, if you see, this is Wednesday's 7 PM, post 7 PM first presentation fair value gap. See the reaction, guys. See the reaction from, though this fair value gap is very small, it is very insignificant, but see the reaction from there, from where it is rejecting. So that is why I plot all these fair value gaps on my chart. Even if you see this Wednesday's PM session first presentation fair value gap, see once we closed below this fair value gap, you see this rejection again from here. So that is why these first presentation fair value gaps are very, very important, and you will find a lot of entries. Even see here, once we closed again below this first presentation fair value gap, 7 PM, post 7 PM, you can see the bodies of the candles, guys. You can see the bodies of the candles respecting this fair value gap. So once this consolidation is over, once this candle closes below this consolidation, you could have gone short, we could have taken your entry here based on this. Again, you could have taken one more entry here, you could have exited till you could have scalped. Say for example, this would have been my entry. I could have exited at the 50% of the daily fair value gap. This would be around 44 handles, and my stop loss would be just above this candle. So another scalp would be, once this candle closes below this fair value gap, you could have gone immediately short on the next candle itself. Say suppose I entered here and my take profit would be just 50% of the daily fair value gap, and my stop loss would be just above this candle. 11, 22. This is 1:2. So if you plot all these first presentation fair value gaps in your chart, you will find lot of trades. You can scalp so many things. So that is the reason. So try to plot all these fair value gaps. At least you plot from previous Friday. From previous Friday to this, you extend all the fair value gaps for the each subsequent day. If you are trading on, say suppose you are trading on Wednesday, so you plot Friday, Monday and Tuesday. If you are trading on Thursday, again Friday, Monday, Tuesday and Wednesday. So that's it guys. So just wanted to show you like how many opportunities are there if you plot all these first presentation fair value gaps. So that's it guys. Thank you.